Hello and welcome. Today I am delighted to be joined by Claire Smith, founder of Beyond Impact. Today we're going to be discussing the Beyond Impact Vegan EIS and SEIS Fund. Claire, thank you very much for joining me today.
It's a pleasure, thank you.
Beyond Impact may be fairly new to the EIS fund management space, but has been actively investing for some time. Can you tell us about the company and its background?
Very happy to. So I would say that the inception in terms of the strategy was in 2017 when I started researching and investing directly in some companies in this space. People got to hear about what I was doing and were interested to invest alongside me. And so on the back of that, the first fund was launched in 2018 and invested all the way through to 2020. And then our second fund was launched in 2022, and we are investing that at the current time. This is not the EIS fund. This is a Luxembourg fund, which is positioned towards larger institutional investors. So our background, why we created the company and why we are doing this, is because we're motivated to be investing in the solutions that allow people to transition away from the use of animals and for animals to be removed from the supply chain. And that's partly a personal conviction of mine and the rest of my team, and also something which I feel is extremely important for our society and for our environment, to basically save the planet, to be honest. It's a big aim, but I do see the shift away from the use of animals as being a very big part of that.
The Beyond Impact Vegan EIS and EIS Fund is new. Can you tell us about the types of companies that the fund invests into?
So evidently UK-based companies, in order that they have that SEIS or EIS assurance. But the key thing is that they have the potential to accelerate this shift away from the use of animals and are providing animal alternatives that are appealing and can take market share away from the incumbents that are providing animal products. So evidently their products must improve these products to the extent that the broader population are interested in them. A key tenet of my investment strategy is that the solutions must be superior, scalable and sustainable. And our intent is that they should bring about ultimately a kinder, cleaner and a healthier world.
And why do you think the transition away from the use of animals is so important? And how big do you see this as an investment opportunity?
It's important in actual fact for many reasons. Obviously, the first one from my perspective is ethical, and that's my motivation. It's a philosophy that I've held for my entire adult life. And I was keen that it should be made easier for people to adopt non-animal products and to shift their consumption because of my concern for the situation of animals, in particular given obviously our farming industry has moved, more and more heavily towards the industrialized farms where the animals are not treated properly. However, aside from that, even leaving that aside, you can definitely make arguments in respect of the environment, particularly the climate, with animal agriculture and all of its supply chain being a heavy emitter of carbon, and also destroying carbon sinks such as the forest. It's the prime cause of deforestation to grow the grains that the animals then eat, or just to cut down trees and then turn it into ranches. It's in addition to that consuming an enormous amount of water, so making water more scarce for people and for other animals in the environment. It's a big polluter. There's an enormous amount of waste that comes out of animal agriculture from the animals themselves, and there is nowhere for it to be put. And it essentially just runs off into streams, rivers, ultimately into the ocean, creating ocean dead zones. Evidently fishing, the oceans are overfished, they're dying. A lot of the ocean fishing is now to create meal that other animals, land animals, eat. Pigs are actually bigger consumers of fish than humans or other fish, actually. And so that's a huge environmental argument that I've already gone through. I haven't yet got onto health. Evidently, animal products are associated with many of the diseases that bring about early death, premature death in humans, cancer, heart disease, etc., or make your last years quite uncomfortable. Things like diabetes, for example, have been associated with eating animals. So I'm interested in human health as well. And in a bigger sense, zoonotic diseases are definitely made more likely through the conditions in factory farms, as well as which antibiotic resistance, superbugs that are not affected by the antibiotics that we have today. From a human perspective, the working conditions on factory farms are horrible, as are the working conditions on slaughterhouses, meat processing facilities, and even worse on industrialized fishing fleets. They're often effectively slave labor. So they go onto these boats and they don't get off them for months, sometimes years at a time, because their documents are being held by the boat owners. So it's a really horrible end of the labor market. So those are all the things that we want to try and get rid of. We want to deal with all of those things by moving away from the use of animals. You asked about the size of the investment opportunity. That is absolutely huge, because meat and any animal derivative, that adds to over 1.5 trillion of sales every year. So it's an enormous opportunity. We haven't, those things go into other things like prepared meals, into clothing, consumer goods, shoes, other types of things that are coming from the animals, not just the meat. Even just looking at protein, the Boston Consulting Group suggested that 11% of the total protein market could be in these alternative protein substitutes. So I'm looking at that versus the 1.5 trillion and saying, well, that's a 150 billion market just right there. So it's an enormous market to tap into. And I actually think that the numbers from Boston Consulting could be on the low side, because as soon as the products reach a price parity or lower with animal products, and they are providing a better taste, texture, they're cheaper, they're better from the environmental perspective, they're better for your health, etc., why wouldn't people buy them? So that's my view on the investment opportunity here.
Can you tell us what stage of the companies are at that the fund invests into, and what's a typical investment size?
Well, for this fund, the EIS fund, it will be seed and early stage companies. Evidently, SEIS and EIS is only available up to a certain amount of investment in the first investment that goes into companies. So we would be going into companies at an early stage, and it is something that we have experience in. Some of the companies which were invested in the period from 2017 to 2020 were seed investments. And the investment size within the fund would likely be from about 300,000 up to about 1 million, which would allow us then to create a diversified portfolio with a fund size of around 10 million.
And how does the fund source its investee companies?
Well, we do have an extensive network of companies in the industry that we are in contact with. And many of those companies directly approach us with their deals. And in particular, we have created a social network, an online network, which companies can use, and where they can provide us with their deals through an online form. And that's where we get a lot of our deal flow directly. It was literally set up for the benefit of the industry so that they could get in contact with us, but also with everybody else within the industry. Being a network, everybody can contact each other on that platform. That platform, so I have people also maintaining this database on the platform. We have over 5,000 companies in that directory, which we maintain, which we use, but we also make available to other people to see the multiplicity of companies that are in this space. We have personal connections amongst the team. Within the team, amongst my team members, I have people that have been in the private equity market for over 20 years. and others that are within the industry that have been operators within food companies within the industry. And so they also have their own personal connections across the industry. So that's really where we get our deals from.
How many companies would an investor expect to have in his or her portfolio?
In terms of the prospectus, I believe it might say 3 at the minimum, but I would anticipate having at least 5, and ideally getting up to 10 in order to have sufficient diversification. I go back to my answer to the previous question that we are talking about seed and early stage companies. So a lot of these companies, evidently, if something is being seeded, it's literally getting it off the ground. So it has no track record at all as a company. It is the ideas of the founders, what they've managed to create in terms of initial prototypes, what they've managed to get in terms of initial traction in their discussions with potential buyers that we are relying upon. Now, there's obviously a lot of things that can happen as a company grows. And so there's evidently high risk in that approach. And that's why you need to have diversification. So 10, I think, is a good target in terms of the number of companies to have within the portfolio, in order that across those 10, we can accept that some may not make it, but others will make it to overcome any losses on the other investments.
Claire, how frequently does the fund deploy, and how long in general does it take to deploy the funds?
In terms of full deployment, it'll be a function of the date of closure of the fund. So we'll start deploying when we have the committed assets, and they would be deployed ideally within 1 tax year. Essentially, what I see is a lot of opportunity in the space. We are not short of deal flow. And in addition to that, we're also seeing the deal flow coming now at much more attractive valuations than it's been for the last year and a half. And as a function of that, we're very confident that we will be able to find attractive opportunities within the first year.
Are you seeing a different demographic of investor looking at the fund, given the vegan focus, or are you seeing seasoned EIS investors looking who are seeking impact as well as investment returns?
I would say that the fund is most appealing to those who have similar principles and who want to use their money for impact and to bring about this impact of changing the way that people consume, making the products better, seeing growth of the companies in this sector. But by no means is it the case that all of the investors in the funds, either this one or the previous funds that I discussed earlier, are vegans. But they can certainly see that there is a trend, that there is growth in the sector. They go into the supermarkets, they see more products on shelves, they go into restaurants, they see that there are vegan options that are being introduced. And clearly, those products have to come from somewhere. They're not just, lentils and fruit and veg. They are using these new plant-based substitutes. And so evidently there is sales growth. And I think anybody, and especially a seasoned EIS investor, would see that what we have here is a new subsector, sub-industry within the food industry, which is growing. And not just the seasoned EIS investors, but the large consulting groups like BCG that I mentioned before that have done this analysis have a long-term growth projection for this industry, where it gets to, as I mentioned, 11% of the total protein market. And that's from currently a level of sales. So when I mentioned the 150, that's from currently a level of sales, which is probably no more than 5 billion or so. So we're talking about at least 10x, maybe 30x in terms of the size of that market. So to get in on the ground floor of these companies is actually a pretty good place to be.
Claire, finally for today, can you highlight a recent fund investment and the reasoning behind it?
Yes. There is a recent fund investment that we did, which was a follow-on into an existing fund investment from the first fund. So I can go a little bit back in time to say why it was a good idea then and why it's a good idea now. And this could have gone into the EIS fund as well, because the EIS capacity of this company has not really been used at all. It's been taken up by very few investors. So there's still quite a lot of capacity. And the company is called, its brand is Mighty. The company name is actually Watkins Drinks because it was created by a family whose name was Watkins, but their branding is Mighty, and they create a plant-based milk and recently actually launched a plant-based ice cream. The reason that I think it's a good example of the type of company that could go into this fund, the EIS fund, is that it is a UK company. It was actually founded in 2018, and I invested in January 2019 and put the first money in. So that was actually from a Lux fund, but obviously it could have been, had the EIS fund been in operation, then it could have been taking up the first SEIS in this company. And then subsequent to that, other investors have come in. I also put more money in 2020 and 2021. Most recently for the new fund, we participated in the latest round of the company. Why? Because it has continued to grow over that period of time. From 2019, where it was listed first in Holland and Barrett, Whole Foods and Sainsbury's, it's now in every single major supermarket in the UK. And recently, in the last few months, it's been accepted for sale in German retailers, Rewe and Edeka, which are sort of like the Tesco and Sainsbury's of Germany. And so, you know, their sales are growing year on year. And in terms of that specific company versus where I went into the company in 2019, the valuation of the company has gone up 20 times since then, with the most recent deal, which was invested in by a large German fund and also a number of German family offices that wanted to position themselves to benefit from the fact that this company was now launching in the German market. So that's from my investment, the valuation I first went in, versus the valuation that literally some strategic and big funds who know the market went in the last couple of months. So that's obviously a nice history and a very exciting future for that company as well, as they go into Germany, sell in Germany, and then potentially go across into other European markets and become a European brand.
Claire, that's all we've got time for today. Thank you very much for joining us.
It's a pleasure. Thank you.
And thank you for watching.